I'm not sure if we have the highest proportion of college graduates in the world. I don't care. What we should care is whether or not people are advancing their lives, not getting degrees in horse. Hey there, friends, fans, and foes of Dad Saves America. John Popola here, and I thought I would take this Friday to talk about the return of student loan payments.
Tonight, millions of Americans falling behind on their student loans, bracing for their wallets to take a hit.
The government can and will collect defaulted federal student loan debt by withholding money from borrowers, tax refunds, federal pensions, and even their wages.
The Department of Education announcing Monday it will start collecting on defaulted student loans on May 5th for the first time since the pandemic.
There have been no repayments since March of 2020. It is not fair that other people are having to assume this burden that other taxpayers are paying for these loans.
According to the Department of Education, almost 43 million borrowers owe more than $1.6 trillion in student loans. Of those, 62% are not currently paying them back.
More than half of $1.6 trillion is simply not being paid back at all. That is outrageous.
Borrowers who remain in default may also eventually have their wages garnished, meaning employers will automatically withhold part of their paycheck to pay off the student loans.
I know student loan debt is painful. I know that it is strange, and I want to get into a little bit of the reasons why it's strange, and that for a lot of young Americans and not so young Americans, it is a serious burden. And a burden that has proven to be a dishonestly delivered burden. We have been told in our culture that getting a college degree is the surefire way to success in the future. Just in general, that has not played out for too many of us, too many of our kids. And the chickens are really coming home to roost. Under the Biden administration, there was an effort to kick the can one more time, and I think we all know how that turned out, but let's take a trip down sleepy memory lane.
This morning, millions of Americans facing mounting student debt on the verge of having their balances wiped clean.
Like a weight was lifted off my shoulders.
President Biden promising life-changing relief to the overwhelming majority of people with student loans, even leaving some 20 million Americans with a zero balance.
All this means people can finally crawl out from under that mountain of debt, to get on top of their rent and their utilities, to finally think about buying a home or starting a family or starting a business.
Now, there's a couple things about this clip. One is the term relief, debt relief. This is a very carefully focus-tested word. People love relief. It's debt relief. But it's only debt relief for some, not for all, because the people that President Biden's talking about that are being relieved of debt isn't the people, it's the specific borrowers. And that debt is being transferred to everyone else. It's not being eliminated. You can't eliminate the fact that these costs have been incurred and debts have been piled up. You have to pay the money back. There are people holding federal debt that will increase if it's not paid by the people who actually borrowed the money. Someone's going to pay it back. Let's think about what is actually going on here at the most basic level. So I am a student and I want to attend a university that I can't afford to pay for right now, which is similar to if I wanted to, say, buy a house and I don't have the entire amount of the cost of the house right now. So I'm going to take out a loan. Where is the money coming from for that loan? Well, and I know there's people who think that you just print the money like MMT, but that's not true. The loan has to be funded. The funds have to come from somewhere. And even if it's printed, you're just stealing it from everybody else that holds dollars. That's inflation. But the way our federal government actually works, since it borrows every marginal dollar, is the government lends the money, and then it goes out into the market and sells treasury bonds to, let's say, your grandma. So your grandma is buying treasury bonds that are promising a yield, and that yield is being paid for by you or by me, the student who's taken out the loan and promised as a contract to pay it back. So when we talk about debt relief, there is no relief. All that's happening is the borrower who actually consumed the services is being relieved in exchange for someone else having to pay back grandma, who lent the money in the first place. Grandma lent the money. You don't get to eliminate the debt. To really do that, then grandma would need to be defaulted on. Grandma would be told by the federal government, I'm sorry, that treasury bond that you bought is worth zero. Sorry. That's what we are actually talking about when you hear terms like debt relief and loan forgiveness. It is wealth transfer from the people who borrowed the money to other people who will have to pay back the debt. That's all that's going on. Every attempt to obscure this is a lie. And we have been lied to and gaslit about everything related to fiscal matters in our country for a long, long time. But it's important to remember how this actually works. Now, let's get back to more rhetoric.
I made a commitment that would provide student debt relief, and I'm honoring that commitment today. Using the authority Congress granted the Department of Education, we will forgive $10,000 in outstanding federal student loans. In addition, students who come from low-income families, which allowed them to qualify to receive a Pell Grant, will have their debt reduced $20,000. About a third of the borrowers have debt but no degree.
Think about that for a second. A third of the borrowers didn't finish school. That means you literally got no benefit. Because a friend of mine, Brian Kaplan, he's been an academic his whole life, but he wrote a book, The Case Against Education. And among the things he studied was whether or not you get any of the claimed benefit of higher income in the future if you don't get the degree. If you go right up to the end, if you take 3.8 years out of the 4 years, and then something happens and you don't get the degree, you don't get that pigskin, what happens? And his answer was nada. You get none of the benefit. He called it the pigskin effect. So these people who took out a loan and for whatever reason didn't finish school, they got no benefit at all.
And worst of both worlds, the cost of education beyond high school has gone up significantly. The total cost to attend a public four-year university has tripled, nearly tripled in 40 years. Tripled. Those Pell Grants used to cover 80% of the cost of going to a public four-year college. Today, Pell Grants cover roughly 32%.
Welcome with this particular issue to a window into how the government literally screws up everything. They make everything more expensive. But this is the perfect example because we can see in detail how this works. How government takes easy credit and claims of making things more affordable by giving people more money without changing the supply of services and makes everything worse for literally everyone except their cronies. So what has happened? He's talking about how school has gone up in cost like crazy. And later I'm going to show you some stats that will blow your mind. But he's acting as if this is some act of God or nature, that college has just gone through the roof because it's suddenly so much more expensive for someone to stand in front of you in a room that was built 100 years ago and talk. I don't know why. I don't know why that is. Why are we spending so much more money for the same exact service? Well, it turns out the reason is the government has been intervening at every step forever. So one example is that both the Clinton administration, the Bush administration, W. Bush, and Obama Biden have repeatedly tried to create a essentially socialized payment scheme. So what has happened is that instead of paying essentially a fixed rate, okay, I'm going to borrow this, the interest rate's 5% fixed, and I'm going to pay it off over a certain amount of time, like a mortgage, like your home mortgage or your car loan. The government has changed the terms of these loans so that you basically pay like a share of your income over time. And what this has resulted in is no one ever paying these things off and the interest just continually accruing. Now, that's not entirely the fault of the government. You could choose to pay it faster than they're requiring you to, but people don't. And so the result is people end up with debt mounting and compounding year over year. So the CBO actually conducted a 5-year study looking at people who had begun paying their student loans in 2012. And over 5 years, where did they end up? Well, by the end of 2017, over 75% of those borrowers owed more than they had originally borrowed. They literally were building more principal debt. They were not paying it off 5 years later. So more than the duration of their undergraduate time, they were now in even more debt than when they started. And by contrast, the median payment among borrowers in fixed plans decreased steadily, again, like your car or your home loans. These are government terms. These are things that the government induced on the student loan market. But of course, this wasn't good enough. The federal government had to go even further, and this is where Barack Obama stepped into the monster of government's own creation.
It was a week in which, together, we took bold new steps towards restoring economic security for our middle class and rebuilding a stronger foundation for our future. It was a week in which some of the change that generations have hoped for and worked for finally became reality in America. It began with the passage of comprehensive health insurance reform that will begin to end the worst practices of the insurance industry, rein in our exploding deficits, and over time finally offer millions of families and small businesses quality, affordable care, and the security and peace of mind that comes with it. And it ended with Congress casting a final vote on another piece of legislation that accomplished what we've been talking about for decades, legislation that will reform our student loan system and help us educate all Americans to compete and win in the 21st century. Year after year, we've seen billions of taxpayer dollars handed out as subsidies to bankers and middlemen who handle federal student loans.
And here we go. Here's the classic canard. It's those middlemen, those bankers. They're the problem. They're the reason why everything's a problem. It's, well, as you'll see, when the government becomes the banker, things don't get better.
When that money should have gone to advancing the dreams of our students and working families. And yet attempts to fix this problem and reform this program were thwarted by special interests that fought tooth and nail to preserve their exclusive giveaway. But this time we said we would be different. We said we'd stand up to the special interests and stand up for the interests of students and families. That's what happened this week. I commend all the senators and representatives who did the right thing. This reform of federal student loan programs will save taxpayers $68 billion over the next decade.
$68 billion over the next decade. First of all, that turned out to be completely false. But even if it were true somehow, where we would have spent $68 billion more than we did without this change, that's like 5 hours of the federal deficit. It's like a couple days, $2 trillion a year. This is chump change. Over a decade, this is completely crazy. And it didn't happen. So it was just a scam.
And with this legislation, we're putting that money to use, achieving a goal I set for America. By the end of this decade, we will once again have the highest proportion of college graduates in the world.
I'm not sure if we have the highest proportion of college graduates in the world. I don't care. Frankly, we shouldn't care. What we should care is whether or not people are advancing their lives, whether they're learning things that actually matter, that help them achieve their dreams, not getting degrees in horseshit. Let's look at what actually happened. What was this reform? What this reform was a complete takeover of student lending. That's what happened. So the federal government largely nationalized the student loan industry in 2010 via a piece of legislation related to Obamacare, which itself is completely crazy because basically this was like a snuck-in scam that was railroaded into the Obamacare legislation during the aftermath of the financial crisis. This was basically the classic never let a good crisis go to waste screw job on the American people. Oh, we've got a financial crisis, we're doing healthcare, let's throw in education while we're at it. Let's sneak it in at the last minute and then we can claim it's a great thing. The Healthcare and Education Reconciliation Act of 2010, the US government now holds 92% of all student loans. So it is the monopoly banker of student debt and has been now for 15 years. And the nation's total student debt has more than doubled from $811 billion in April 2010 to $1.74 trillion in April 2022. I believe it has started to taper off and remain right around there since. I'm not sure where the $68 billion savings came in over a decade, but we've been 15 years now and so far not looking so hot. The question is, why? Why has the total government takeover of financing of college driven the price through the roof? Well, there are multiple reasons why this happens.
There's substantial empirical evidence showing that cheap federal loans are actually a major cause of the rise in college tuition, which has outpaced the growing cost of even medical care and housing.
What is going on? For the most part, you are talking about a person standing in a room talking. That is what it is. That is what college is. I am a college graduate, and college was going to a place with buildings that are old while some old person in front of you talks. And you buy used books from the bookstore at inflated prices. That's college. So how is it that it is the most inflated thing ever? Well, here's how.
This theory was famously argued in a 1987 New York Times op-ed by then Secretary of Education William Bennett, who wrote that increases in financial aid in recent years have enabled colleges and universities blithely to raise their tuitions, confident that federal loan subsidies would help cushion the increase. When you give people more money to pay for something, prices tend to go up. And forgiving debt makes the problem worse. Students don't care as much if college administrators overcharge for their services because they'll probably never have to pay it back anyway.
This is something that most people, I don't think, fully appreciate about how we end up with cheaper things versus not. And that is that inside of the typical market, the market where people have to bring a product to consumers and can't force anyone else to pay for it, the consumer, the buyer, actually ends up being the one that determines the price. Consider that Apple, when they released the iPhone, initially released it for something like $6.99 cash at the time. I remember this because I'm a nerd and I've got Apple stuff all over the place. Within 2 months, they dropped the price by $200. And that was because it was just too expensive. And pretty much once people like me bought the thing for $6.99, very quickly it was clear that it was too expensive for most people. The consumer sets the price. The person paying ultimately sets the price. And that is in something relatively competitive, where I don't need to buy from you. I can buy from somebody else or not buy it at all. And so what happens next is the supplier, which in this case would be the universities, are forced to figure out how to do more with less, how to bring down the cost of their service until people are willing to buy it at the price offered. This is the process by which competition leads to better goods and services. Unless somebody can come in with cheap credit and lend you the money. This is what has happened in housing. The government has played a role in making housing lending essentially irrationally cheap for over 100 years. Case in point, the 30-year fixed rate mortgage didn't used to exist. And it didn't exist for a reason, because it never would have made any sense for anyone to lend any of us money at a fixed interest rate for 30 years. Think about how much economic change has happened in 30 years. Consider the bet. Who would take the bet? I am sure that the best I could do with my money is 5%. Right now, it's a 7%. When I got my mortgage, it was almost 4%, just below. Man, my bank got a bad deal because just a couple years later, they could have gotten 7%. But no, they're stuck with me at 3.7. These products wouldn't exist without government. And if they didn't exist, people wouldn't be able to afford housing or school at the prices being offered. And so the suppliers would lower the prices. That's what would happen. That's what happens in everything else, everything that the government doesn't pump and print money into. But that's not the only thing going on. There's other forces at work that make everything worse. There is a kind of parasitic growth of administrators. So Harvard, from 2004 to 2023, the number of full-time administrators increased by 43%, while the faculty numbers grew by only 11%. This is just about 20 years. This massive growth in the administrative staff and the costs that go along with it isn't limited to expensive schools like Harvard. It has happened across the university system as a whole. For example, between 1987 and 2012, the number of administrative staff more than doubled, adding over 500,000 administrative and professional employees. During the same period, the number of temporary faculty increased significantly, while full-time faculty numbers declined. So we are paying way more for college. We have fewer full-time professors and a massive administrative state. And this really is just like government growth. The massive growth of bureaucracy inside the university, people providing neither research nor teaching. And that leaves aside the fact whether any of the teaching is any good or whether the research is worth a damn, a lot of which is not. One other piece of the puzzle is with all this easy money backed by we the taxpayer, you get things like Elizabeth Warren being paid over $400,000 a year to teach one class. And there are countless other examples. This sort of crazy inflated gambling and paying with other people's money that goes on to buy influence, to pay off cronies, to keep the gravy train going. I want to come back to Barack Obama because he is trying to claim that it was the bankers who were the special interests.
Year after year, we've seen billions of taxpayer dollars handed out as subsidies to bankers and middlemen who handle federal student loans, when that money should have gone to advancing the dreams of our students and working families. And yet attempts to fix this problem and reform this program were thwarted by special interests that fought tooth and nail to preserve their exclusive giveaway.
Special interests fighting tooth and nail to protect their special giveaway. What President Obama was failing to recognize, failing to say, is that the universities themselves are a special interest. They are a massive special interest. And they have lobbied aggressively to maintain their taxpayer giveaways in the form of taxpayer subsidized student loans. That is the special interest at work, and it has nothing to do with us as parents or our kids as students or all of us working stiffs as taxpayers. We are all the third man holding the bag. But this is part and parcel with the way this kind of thing works in general. And there is a graph that I will probably come back to on more than one occasion by a friend of mine, economist Mark Perry, that charts the costs of all the things we care about, basically, over time. And when you see it, it should make you very angry, because it makes me angry. And the lesson in this is profound. Take a look at this. Starting in the year 2000, straight through to the present. And along the vertical axis is percentage change in price, nominal price. This is not adjusting for inflation. So as you can see, over that time, there has been 87% overall inflation. So that is the aggregate cost of everything in dollar terms has gone up in total by 87%. But notice where that inflation has actually occurred. Number one, hospital services, where more than half of every dollar spent is spent by the federal government. Number two, college tuition and fees, 187% up. Look at the next one down, college textbooks, 158%. Now, the last time I checked, in the past 25 years, we had this thing called a computer that came along and changed just about everything, but especially the delivery of text. And if you look here, you'll see that computer technology has gone down even with inflation accounted for. TVs, toys, computer software, cell phone services, new cars, electronics, all of this stuff has gone down dramatically, even before you account for inflation. When you actually normalize prices for inflation, the drop is profound, it's dramatic. How in the world are textbooks up 158%? The only answer is a government-fueled crony screw job taking place in higher education. Higher as in higher prices. That's what we're talking about here. And that's why I will not cry a river for the return of payments on student loans. It is ultimately your responsibility as an individual to pay your debts. And we as parents need to wake up and look with clear eyes at the choices that our kids are presented and that we get on board with. Because what we are being sold by our government is a series of crony lies to protect people that fund them so that they can get funding from all of us in return. And the results aren't good. And the last piece of the puzzle here is the sheer maddening unfairness of it all. Because while generations go into these institutions and study nonsense at our expense, while professors and administrators and these institutions that have become hedge funds that pretend to be a school, like Harvard with its $50+ billion endowment, the rest of us pay for it. And when loan forgiveness schemes get announced, those who played by the rules and paid off their debts get nothing.
So if we're lending money that ostensibly we don't have to kids who really have no hope of paying it back in order to train them for jobs that clearly don't exist, I might suggest that, we've gone around the bend a little bit.
Yeah, we sure have. We sure have. And the other thing we've done is subsidize institutions that have decided that they are fundamentally against the American way of life and the basic institutions of what made America a shining place to come and live, a place where immigrants are beating down the door or used to. And that's what's going on here. It's just fundamentally unfair to do this to everyone else in the name of trying to buy votes from young people.
Loan forgiveness programs are incredibly unfair. One-time cancellation not only screws over taxpayers and those who've already worked for years to successfully pay off their loans, but it also leaves out the generation of college students about to graduate into thousands of dollars in debt. Why should students worry about staggering loan balances if the government is just going to cancel the debt anyway? It only discourages them from taking a more prudent path, like attending affordable community colleges before enrolling in a 4-year university, or going to a trade school that arms students with practical skills that lead to high-paying, in-demand jobs. If colleges notice that high tuition is scaring off would-be students, they'd have to lower their prices.
And that's the facts. That's the facts. If we weren't basically having the cost socialized on the rest of us and encouraged to do bad behavior, everything would be different. And while we wait for the government to change, I think we as parents need to apply responsibility in this regard. We can't make conscious choices that undermine the future of our kids and our country. The fact that the government is giving away cheap money, it's not as cheap as it looks. And if you're gearing up for your kid to graduate high school and looking forward or dreading next year, well, I'm sorry. But I'm glad that the Trump administration is trying to reintroduce some discipline. What he should really do is shut all of this down. That's what needs to happen. The federal government needs to get out of the business of student loans. Leave this work to the private sector. And if actual banks, those greedy, terrible bankers who take our grandparents' money and invest it so that our grandparents have a return on their savings, well, what they'll do is they'll say the interest rate on your gender studies degree is 45%, and your interest rate on your computer science or your geoengineering or your nuclear, applied physics, well, that's like 2% because we know you're going to be able to pay it back and you're low risk. We need to get market prices back into this stuff. It is the only thing that will change. The other thing that will change when that happens is all of the stuff we hate about college will go away. It is all a product of being cheaply subsidized by the government. And along with that subsidy comes strings that lead to Title IX nonsense, DEI, and all the rest. This is the 1-2 punch of federal involvement in education, and it all has to end. It all has to end. And that is going to start when we, the people, recognize that and demand it. That is the only path forward. I think there's no better way to end than with the ultimate example of that lesson, and that is from good old Milton Friedman.
There's no such thing as a free lunch. That's it. If you've got to restrict me to one piece of wisdom, that's a one piece of wisdom. There's no such thing as a free lunch. You pay for it.
Tan Staffel. This is the ultimate economics lesson. There is no such thing as a free lunch. There is no free college. There's no free healthcare. There's no free anything. Someone has to pay. Someone has to work. Someone has to provide the service. And when someone else is paying, I'll take two, ends up being a real disaster for everybody. If you want to dig into some of the data here that I was referencing, you should head over to dadsavesamerica.com, where we put the links and references to all this stuff. It will wreck your weekend. It will make you angry, but let me know what you have to say. Do you think this is helpful? I hope it was, and I hope you have a great weekend.